Hey, good morning. This is Meir Valensky with Driving Markets. Hope you're all well. Remember, this is a media production, so anything said in this piece is not financial advice, it's not investment advice, it's purely there to give an opinion on financial markets, an overall wrap, an overall indication as to where we're going, and to give you a little bit of material, a little bit of knowledge as to what's happening in financial markets, retail markets, property markets, commodity markets, etc. Anything that you invest in or you trade in, it's your decision. Anything you make, it's your money. Anything you lose, it's your losses, etc., etc. Let's kick off. So mainland China reported over the weekend 3 COVID-related deaths. The first deaths since the Shanghai lockdown and the first deaths since May this year. Now that sent panic waves through China, because if they're going to get COVID-related deaths, there's going to be more lockdowns. Now, at the moment, they've had 26,000 cases of COVID reported in China. They're very concerned that there's now going to be an upward trend within China mainland. So there will be more and more lockdowns as far as China's concerned. Why is that important to us, and what's the significance? Well, if you recall, the starting point of inflation was China, because the supply chain became frustrated globally, and therefore there were no goods getting to the shops. Now, when the world went into lockdown, everything was fine. But when the world reopened up gradually, and it took over a year and a half to be completely opened up, China was still going through lockdowns, because China's got a zero policy when it comes to COVID. And as a result of that zero policy, many factories and areas were shut down. And remember, a province in China, you're talking about 50 to 80 million people within the province. I mean, the provinces are huge. Some of them are 150 million. Remember, in China, you've got around about 1.7, 1.8 billion residents, citizens. So the industrial areas, when they're shut down, people can't even leave their house or get to work. Trucks can't move, factories are not working, workers don't move, the trains don't work. Everything is shut down in that province, and therefore there's no goods being produced. If there's no goods being produced, then there's nothing being delivered to the retail shops in the West for your consumption. Now, if you take into consideration what we've had over the last 2 years, which is a supply-driven inflation phenomenon. Okay, so what's happened is that the supply line is broken, and that's causing a inflationary effect on the goods, because the demand for the goods is still there. That's not happened, and likely not to happen going forward, because with China going to lockdown, that's not going to get the goods to the shop, to the shelves that you need. Added on top of that, the massive stimulus package that was introduced during COVID and the pandemic, that's also added to inflation. So you're likely to see inflation rising, in my opinion, over the next coming months. I don't believe inflation has gone down. I believe inflation is going to go up. And I think we're talking about, by February in the States, double digits. Yes, I'm talking about double digits in the States. We've already got double digits in the UK at 11.1%. We've got it in Europe. And therefore, we're not far off double digits in the US. If we get anywhere, if inflation starts to rise at anywhere double digits, then you're likely to get interest rates at 7.5% by March, April next year. Now, you've got also within the Fed, you've got the minutes of the Fed coming out, of the last Fed meeting. They're coming out on Wednesday, and they'll tell you exactly what the Fed thought about the interest rates and where the economy is going. And there is an indication of the conflict between the Fed members and the governors. For example, James Bullard of the St. Louis Fed and Lael Brainard, as governor of the Fed, is also, they've conflicted, where Lael Brainard has said that maybe they can take the gas and take the step off the raising interest rates, where James Bullard has actually said we need to raise interest rates all the way through to 7%. And that would be an indicator as to where the Fed is feeling within the interest rate regime. So if the governors within the Fed are conflicting, therefore the markets are going to get a mixed message and not really sure where interest rates are going to go. For certain, in December, rates are going to go up in the US by at least 50 basis points. I suggest 75 basis points. But I'm also saying on driving markets that rates in the States are going to go up in January, February and March by 75 basis points, because I think inflation is going to go through the roof. On Wednesday also you've got the University of Michigan Consumer Confidence Report that's come down from June from about 59 down to 54, which is not a good sign. The consumers are worried about inflation, interest rates, and all of the and cost of living, food, energy price, etc. You're going to see food and energy prices rise over the winter months, especially energy, as more consumption is taken in Northern Europe and America, Canada, etc. So you'd see energy prices rise. That will have a big impact on inflation. You may see housing come down, cost of shelter come down. There are indicators that rents are coming down, so that will also have an impact downwards on inflation. So you can see it's a two-way traffic as to where we're going here regarding inflation. What's that going to impact on foreign exchange markets? Well, if inflation rises, obviously you're going to have a dollar rising, but for the next week or so, 2 weeks, maybe till December, you could have a falling dollar and a stronger pound, euro and yen, Swiss franc and Canadian dollar, because the trend at the moment on the dollar has been broken. It's slightly going down, it's reached its top, so you can expect the dollar to go down slightly over the next few weeks. What's going to happen on the crypto sector? Well, the crypto sector, as I've been saying on Instagram, YouTube and shorts on YouTube, is that it's in chaos, and there's going to be more chaos going forward. There's going to be more platforms that are going to go bust. Take that into consideration. I must mention Elon Musk. I'm a big fan of Elon Musk. I think he's doing a fantastic job at Twitter. He's getting rid of all these lazy son of a gun high-tech guys who sit around in their shorts and their t-shirts and their flip-flops drinking cappuccinos, doing absolutely no work, thinking then some sort of club, like all the high-techs, they're sort of a club, they're part of a social club. They go to work to have a social club, which is just ridiculous. You should be going to work, and that's what Elon Musk is doing, sucking everyone and getting back to the disciplines of working. You go to work, doesn't matter whether you're a high-tech, startup, wherever you are, get rid of everyone and start again. So Elon Musk, a big fan. I've got to talk about Tesla. I think Tesla is going to go down to around about the 150 level. Amazon's going to go down to about $75, and Meta, Facebook, which is running at the moment at 111, it's far too high. It needs to go down all the way to $70. And I have actually got a personal view, believe it or not, I think Facebook could end up going bust, because Mark Zuckerberg is pumping $25 billion into the metaverse, which is a complete waste of time. It's got no value whatsoever. It's not tangible. Therefore, those shares are a sell. So you need to sell Bitcoin, which is going to fall well below 15,000. Remember, I'm stating this. I want to state it very clearly on driving markets. You can use it as a reference point. Bitcoin is going down, okay? Not going up. It's going to go down. There's going to be more trouble on the markets in crypto sector as a result of platforms going bust. So Bitcoin is going to go down, okay? That's number one. Number two, Meta is going down, Amazon is going down, and Tesla is going down. All right, not because Tesla's bad, it's just got a few problems with Twitter. So I want to make that clear. I'm a big fan of Elon Musk, but I think Tesla is going to go down. Gold is struggling at the 1740, 1750 level. It can't seem to get up to 1800. It's struggling there and could go down further. Interesting one to keep an eye on is tin. As I said last week, it's beginning to bounce around a little bit, move upwards. Massive play in the economic cycle, and if tin goes up, that's a good sign overall for the economy. Bonds picked up last week on fears of rising interest rates. I think bonds, the 10-year yield is going to go well above 4%, and there's a massive divergence now in inverted curve between the 2-year bond and the 10-year bond. I explained this in an educational slot on driving markets, which can follow it on. But that divergence is the biggest now, or the biggest inversion in 40 years. Clear sign of recession on the way in the next 12 to 18 months. This is what I've specifically stated at driving markets. Make a note of it. This is what's likely to happen, and don't say I didn't warn you, didn't tell you. Okay? This is Meir Walensky with Driving Markets. Subscribe, pass comments, share with friends, watch me on Instagram, and I'll keep on updating you. Have a good day.